You are watching Market Watch, the brief overview of the key events from the world of finance. The Federal Reserve has kept its benchmark interest rate at its highest level since 2001, fully confirming investors' expectations. But subsequent comments on this decision made buyers on the U.S. stock market nervous. After all, the regulator will not begin to reduce the interest rate until it sees further progress in returning inflation to the target level of 2%. Simply put, the probability of a key interest rate cut in March, as predicted by most investors, has sharply decreased. Accordingly, the demand for risky assets decreases, putting pressure on them. And now let's move on to the cryptocurrency market, which has become much closer to the U.S. stock market. Indeed, since January 11th of this year, it has been part of the stock market, appearing in the form of a Bitcoin ETF. As a result, the collapse of key U.S. stock indexes is now a bearish fundamental factor for Bitcoin and the cryptocurrency market as a whole. Paradoxically, the cryptocurrency was created with the aim of decentralization and avoiding government regulation, but eventually became part of one of the largest U.S. markets, which is also one of the most regulated. Continuing to discuss the market's reaction to comments on the decision on the key interest rate of the Federal Reserve, it is necessary to pay attention to gold. Euphoria has been replaced by aggressive sales, but there is no panic and most likely it should not be expected. It also remains unlikely that key stock indexes will begin to form a bearish trend. The fact is that the Fed has repeatedly hinted at overly optimistic market expectations for a future rate cut. Therefore, the current decline, including in gold, may turn out to be a short-term correction. This is very clearly seen in the reaction of the US dollar paired with most currencies. Looking at the quotes of the euro to US dollar currency pair, it becomes clear that the sellers did not manage to fix themselves under the technical support level of 1.0800. The situation is similar with the pound sterling to US dollar currency pair. The activity of sellers has significantly decreased at the level of 1.2650. If we do not see a significant strengthening of the US dollar in the coming days, this will only confirm the theory that the observed reaction to comments on the Fed's decision on the key interest rate will become short-term. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.